Ever wonder about those big business acquisitions that just seem, well, perfectly timed? Like the company buying knew exactly what they were doing.
Uh-huh.
Today, we're diving into one like that. Huntsman Corporation buying Rockwood's Performance Chemicals division.
Absolutely. And this really wasn't a spur-of-the-moment thing. It was a deeply calculated move. We've looked at market research, strategic analyses,
Right.
and they paint a really fascinating picture of how insight drove this whole deal.
So our mission here is to unpack those key insights. What did the market research actually tell Huntsman that pointed straight to Rockwood? How did that shape the nuts and bolts of the deal and the integration?
And what happened afterwards, the long-term impact.
Exactly. Think of this as your fast track to understanding a pretty significant piece of business strategy. Okay, let's get into it. What was it about Rockwood that Huntsman's market intelligence flagged as so attractive?
Well, Huntsman's research was incredibly focused. They were looking hard at customer demand, especially in performance additives. Things like TO-Euro titanium dioxide and color pigments.
Okay, the core stuff.
The core stuff, yes. But the real insight was spotting a shift. It wasn't just about needing any pigment anymore. Demand was exploding for pigments with really specific qualities.
Like what?
Think, enhanced durability for car paint, better opacity, stuff that met stricter environmental rules. The research showed customers weren't just asking for this, they were actually willing to pay a premium for it.
Ah, so higher value applications.
Precisely. And that's where Rockwood was strong. They'd already made strategic bets, invested in these high-performance pigment technologies.
So they were already positioned where the market was heading.
Exactly.
Yeah.
Plus, you look at where Rockwood was dominant: coatings, plastics, cosmetics. These are industries where, innovation and quality really matter to the end product. Customers notice.
Makes sense. So Huntsman saw this alignment with market trends. What else did the research turn up?
Operational efficiency was a big one. The data showed Rockwood had this really lean, efficient production setup, and that meant consistent profits, even when the market got choppy. Huntsman definitely saw the value there, the potential to maybe learn from that and find synergies with their own larger operations.
Right, so it wasn't just products, it was how they made them too. And what about geography? I recall that being important.
Oh, absolutely crucial. Huntsman was mainly strong in the Americas and Asia Pacific.
Mm.
Rockwood, their stronghold was Europe, the Netherlands, Finland particularly.
Very little overlap then.
Almost none. So buying Rockwood meant instant geographic expansion, opening up whole new markets and customer bases for Huntsman pretty much immediately.
A neat fit. Any other standout factor?
Yeah, customer satisfaction. The research showed Rockwood customers were really happy, especially with the technical support and the application know-how they provided.
That's valuable.
Very. Huntsman wanted to bring that customer-centric approach into the bigger company. And then there was the whole regulatory angle.
Ah, the environmental side.
Yes. Research flagged increasing scrutiny, especially coming out of Asia. Rockwood's facilities were modern, compliant, and they already had experience with tough European environmental standards.
So they were kind of future-proofed in a way.
That was definitely a plus. It suggested they could meet future global standards and maybe even get a competitive edge through more sustainable production. They looked like a good fit for today and tomorrow.
Okay, so a compelling target. Now, how did all this market insight actually influence, structuring the deal itself and then managing the integration?
Right. This is where the research really gets put to work. Huntsman didn't just pull a price out of thin air. They used data to map the whole thing out. Internal studies, third-party reports, they projected huge synergies.
How huge?
Up to about USD 130 million in annual cost savings.
Okay.
And they expected that within just 2 years.
Wow, that's specific.
It was. The research pinpointed exactly where those savings would come from. Procurement, buying raw materials together, logistics, combining manufacturing, even R&D. The detail really shows their confidence based on the data.
How did they identify those specific areas so clearly?
Well, they did a lot of competitive benchmarking,
Right.
looking at best practices from other top chemical companies. That helped them see where combining Huntsman and Rockwood could really drive improvements.
Okay.
And customer segmentation analysis was key too. They really dug into Rockwood's customer list to make sure the transition was smooth.
Didn't want to lose anyone in the shuffle.
Exactly. And they wanted to figure out how to offer those customers Huntsman's broader product range without causing disruption.
So keeping the customers happy was central.
Absolutely central. They actually went out and talked to key Rockwood clients, surveys, interviews, that sort of thing.
What did they learn?
A big takeaway was how much those customers valued Rockwood's innovation pipeline. They wanted that continuity.
Ah.
And that directly led Huntsman to make retaining key R&D people from Rockwood a top priority. You see how market feedback directly shaped a major post-acquisition decision.
Yeah, you definitely don't want to acquire a company for its innovation and then lose the people doing it. What about looking ahead, planning?
Predictive modeling came in there. They used it to forecast demand, especially in fast-growing emerging markets under different economic scenarios.
So, better planning for production, inventory.
Right. Trying to match supply with anticipated demand. Honestly, market intelligence touched almost everything. Branding decisions, how they handled employee retention. It was all about using data to minimize the risks.
Sounds incredibly thorough. Okay, stepping back a bit strategically. For Huntsman, what were the big gaps they were trying to fill by buying Rockwood?
Well, before this deal, Huntsman relied pretty heavily on their polyurethanes and textile effects businesses.
Right.
Good businesses, but, they faced pretty cyclical demand. Margins were under pressure sometimes.
So ups and downs.
Yeah. The market research clearly showed that moving into performance pigments and additives, Rockwood's territory offered diversification. These were businesses with generally more stable demand, often higher margins.
So building a more resilient company overall.
That was a big part of it. Rockwood also brought specific technologies Huntsman didn't really have. Things like advanced color science formulation, sophisticated surface treatments for pigments, high durability stuff for tough sectors.
Like automotive construction.
Exactly. Areas where performance really, really counts. It was about moving up the value chain.
And you mentioned sustainability earlier. How did that fit in?
That was huge. Rockwood had a strong R&D pipeline focused on sustainable pigments, low VOC, fewer volatile organic compounds, heavy metal-free options.
Which was becoming more important.
Increasingly so. Huntsman's own research showed their business customers were more willing to pay a premium for greener options. So Rockwood's capabilities were perfectly aligned with where the market and regulations were heading. It shows how smart acquisitions often anticipate those future shifts.
Buying into the future, like you said. And scale. You mentioned scale.
Yes, scale was another piece. Huntsman's existing pigment operations weren't as efficient as they could be, partly due to their size. Rockwood had efficient manufacturing assets.
So an opportunity to combine.
A big one. Combine production, get more leverage when buying raw materials, streamline logistics. It all leads to lower costs per unit.
Making them more competitive.
Significantly more competitive. It helped them go toe-to-toe more effectively with the industry giants, like Chemours and Kronos. Not just on price, but offering a stronger overall package.
So bigger and better, essentially. Okay, fast forward. Looking at the long term, what were the main outcomes? Did it work?
Well, it fundamentally reshaped Huntsman, made them more global, more diversified, more focused on specialty chemicals. And interestingly, they later spun off the Combined Pigments and Additives division in 2017, created a new company called Venator Materials.
Why do that?
It was a strategic move to unlock more value, let both Huntsman, focusing on its other core areas, and Venator, as a pure-play pigments company, sharpen their focus.
So the acquisition enabled a later, more focused structure.
You could see it that way, yes. Financially, those cost synergies they predicted, they largely materialized. Huntsman saw better profit margins in performance additives.
Driven by?
A mix of things. Better pricing power, the operational efficiencies, selling more of those higher value products we talked about, and critically, customer retention was high. They kept the Rockwood customers.
And kept innovating.
Yes, they successfully launched new products combining the strengths of both legacy companies. And Huntsman has kept investing heavily in R&D for sustainable pigments and specialty additives. That shows Rockwood's lasting influence.
So the whole story really validates the power of market research.
Absolutely. It shows how deep research can guide successful acquisitions by making sure your strategy aligns with market trends, customer needs, and crucially, operational realities.
And I believe there's a pretty impressive financial footnote here, too, our fast fact.
There is. After the Rockwood acquisition and then the Venator spinoff, Huntsman managed to slash its net debt by over $1 billion, over USD $1 billion.
Wow.
Yeah. It really underscores the financial value creation that came out of this whole well-researched strategic process.
So summing it up, Huntsman buying Rockwood wasn't just a hopeful punt. It was a strategic strike, guided precisely by market research. It led to diversification, innovation, efficiency.
And significant long-term value.
Exactly. Which leaves us, and you listening, with a thought. How much does truly understanding your market, your customers, underpin any successful strategic move? It doesn't have to be a billion-dollar deal.
What small detail, what piece of insight out there right now might hold the key to a major breakthrough or a competitive advantage in your own field? Something to think about.